I'm Dr. Demetrio J. Aguila III. I'm a peripheral nerve surgeon, I'm an ear, nose, and throat surgeon, and I'm also a plastic surgeon. I'm the host and founder of the Direct Care Movement podcast, where we dive into the intricacies of direct care, whether it's direct primary care or direct surgical care. You can find out more about what this movement is and where it's going and where it came from. I'm excited today to have with us Tyrone Franklin, who's a benefits advisor and actuary. Hi, Tyrone.
Hi.
Thanks for joining us today.
My pleasure.
Why don't you tell us a little bit about yourself?
About myself?
Yeah.
Well,
whatever you feel like telling.
Yeah. I'm a Nebraska native. Been in the state and in Omaha since 2010. That's where I got my introduction into health insurance. Started as an actuary and an actuary by trade. And along that journey, I was introduced to a gentleman by the name of Dave Chase, who's one of the co-founders of Health Rosetta, kind of a nonprofit national movement that is trying to fix healthcare. And so that was in 2017-18, and was really intrigued about what he was doing, what Health Rosetta was doing, but still stayed behind the computer screen and the Excel formulas, and was in the actuarial world for a handful more years. But continuing to see the rising costs of healthcare and even just like the downstream effects, the complexity. And I only know what I know about health insurance because I've been in the industry for 15 years and I'm learning new things every day. And so felt like the Lord allowed a way to kind of pivot in my career and become a benefits consultant, become a Health Rosetta advisor. And then I've been on the pursuit the last 2+ years to try and scale those solutions and bring that to the market.
Sure. So a lot of our listeners are new to this concept of the finance side of medicine. It's something that happens, it happens in the back room, so to speak.
Sure.
I grew up not too far from New York City, and I remember a story that my high school history teacher taught. He would tell us, and he'd say, when he used to teach in the city, he would ask his students, well, where does milk come from? Well, it comes from the grocery store. Well, where does it come from in the grocery store? Well, from the back room. In their minds, there was no connection between the milk and the cow that produced it, right? Yep. All they knew is that it came from the back room. And I think for a lot of our audience, that's how healthcare finance works. It's something that happens at the back room, right? So what is an actuary? Let's start with some real basic terminology.
Sure. An actuary is somebody who analyzes risk. And so, the first actuary was somebody that underwrote traveling ships back in the day, a couple centuries ago. And so, ships would go out from port and there was a lot of valuable cargo on that, and they wanted to produce insurance.
Sure.
Or somebody would pay a premium, and if that ship didn't make it to its destination or didn't make it back, then there was some protection, a level of protection that would make the consumer whole, or not the consumer, but the purchaser of that insurance whole.
Sure. And so the idea behind insurance is, I liken it, we've had this discussion before, I liken it to legalized gambling in a sense. You're making a bet, right? I pay you a premium, that's my bet. Your bet is that, you're not going to have to pay out on the disaster that might ensue, right? Yep. And so you're betting as an insurance guy, you'd be betting a much larger sum of money against my small sum of money, but that's because the likelihood that you're going to have to pay out is so much lower than the likelihood that I'm going to, get any of my money back.
Yeah.
Right?
Yep. So
how does that fit in with being a benefits advisor? What is that exactly?
Sure. Yeah. And I mean, just to kind of play on that risk, doctor of probability, to kind of relate to the audience a little bit. And so how does it relate to employee benefits? Well, and one other thing I should mention on the background there, as we talked about, it was originally created for boat insurance.
Sure.
But insurance in any form, in terms of car insurance, property casualty, home insurance, health insurance, actuaries will be involved in some capacity there. And so from a benefits consultant standpoint, what we do is we help companies purchase and acquire healthcare.
Sure.
And so employee benefits and health insurance primarily are one of those high ticket items that companies offer employees to help attract and retain them as part of their workforce. And so companies then have decisions to make what type of funding how they're going to fund their health insurance. And I won't get too much into the weeds, but just to lay the land, there's fully insured, there's level funded, there's self-insured. And so there's all these different avenues that a company can purchase and acquire. And a benefits consultant is somebody that's going to come in alongside that company and help them partner and navigate the complexities of healthcare.
Sure. So now I think a lot of the people that are listening are very interested in learning more about how this insurance thing works. And I mean, you and I have talked about this a lot before, but obviously our audience hasn't heard that discussion. So let's start with the bigger picture. You touched on insurance. What's the idea behind insurance in general? And then how does that play into health insurance versus health care versus other types of insurance?
Yeah, great question. So insurance, you likened it to gambling a little bit. As we've talked about, it's risk, it's probability, and establishing an agreement between a purchasing party and a selling party of paying something for protection or coverage.
Sure.
And so generally, in most of these examples, most insurance is to cover catastrophic things. You carry car insurance for a car accident. You don't carry that for a typical oil change or the changing of the windshield wipers or changing of tires. Like that's not included in that premium. So it is typically and historically geared towards that catastrophic coverage. So you're paying a carrier, an insurer, to cover those high, less likely or less probable events. And then when something does happen, that's where the insurance carrier is going to pay out.
Sure. So it's high cost and relatively unexpected.
Yes.
Those are the two criteria that insurance is originally intended for.
Yep.
So now how does that fit into the health insurance model?
Yeah, healthcare.
Or how doesn't it fit?
Yeah. Healthcare is operated very differently because, like we said in that car insurance example, when you have an oil change, windshield wipers, tires, like that's on the consumer's own dollar to go fix and be proactive and to handle those things. Health insurance is operated very differently in terms of a primary care visit, a preventive care visit, ongoing RX medications, like all of those things are tied in and kind of bundled together with how health insurance is packaged.
Sure. So what does that do to cost?
It increases them. Mm-hmm. And then you add the complexity of how healthcare is purchased and acquired in terms of there's no other good or service that really comes to mind that we engage with on a consistent basis where we're getting a service and then paying for something days, weeks, months down the road.
Sure.
Without knowing what that price is.
Sure.
And so there's a lot of lack of transparency in the marketplace when it comes to trying to know what a preventive care visit costs or know what a blood draw is or know what an imaging photo is going to be.
So why would the average person want to know that stuff? I mean, I have patients that come and say, Doc, just run it through my insurance. I don't want to know any of that stuff. Now, obviously, I have that conversation with them and say, well, we don't do anything with your insurance. Here's how much it's going to cost. But the follow-up question I often get from patients, and the question that often comes up from medical students and residents when they're starting to be exposed to this stuff is, well, what's the big deal? Why should they want to know this?
Well, ultimately, I think there's a mindset disconnect in the marketplace. I think people, consumers, myself included, I have an insurance card. When I go and get a service, I feel like insurance is paying for it. But the reality is I'm paying for it. Right. My company's paying for it. And so there's a disconnect there that I hope in years to come continues to kind of get peeled back. And even from a governmental standpoint, right? Like the ACA marketplace, like we taxpayers are paying for the funding of the healthcare that's coming through those marketplaces.
Sure. Sure. So in your mind, how does this disconnect between cost and value, how does that affect patient care? How does that affect Joe Blow, who's out there working in the factory and, he twisted his ankle and wants to go see somebody about it?
Yeah, I mean, it's really hard right now. And what I mean by that is because we don't have that mindset that we are the ones actually paying for healthcare.
Sure.
Then there's overutilization that can happen. And also, and we haven't really gotten into some of these finer details, but plan designs are becoming less and less rich.
Sure.
As a means for employers to offer healthcare, they're shifting dollars from known premium dollars to higher deductibles, higher copays, higher out-of-pocket maximums. And so Joe, who has the ankle twist, he's looking at a $2,500 deductible to have his ankle looked at. And he may or may not go get that service because he's more worried about paying for groceries or daycare or the next tank of gas.
Sure.
And so we've really created kind of an unfortunate situation for the normal American to have to go and receive care that they need, or even proactively want to engage care, and the lack of transparency of costs, these rising plan designs, deductibles, coinsurances that they're having to navigate,
Sure.
lead to confusion and actually unhealth.
Sure. So let's go through a few other basic terms then. So what is a deductible? What's a premium? And what is coinsurance?
We will do our best.
Sure.
And just to add a comment for us, or a statistic, there's a study out there by Policy Genius that the 4 basic health insurance terms, deductible, coinsurance, copay, and out-of-pocket maximum, only 4% of Americans can accurately draw a line from that term to a definition,
Sure.
the correct definition. And so you're spot on in terms of consumers not understanding what they have and then trying to navigate that on the back end. So
Sure.
a long ensemble to a premium is what a company or an insured is going to pay an insurance carrier for coverage. Those are typically done on a monthly basis. So every month you're getting a bill, and we'll speak specifically in the health insurance realm. If your company provides health insurance, then the company's paying a portion of that, and you as the employee may or may not be paying a portion depending on how much the company is deciding to pay.
Sure.
Meaning some companies pay 100% of the premium, or there's some sort of cost share.
Sure. But the reality is that even if the company's paying 100% of it, it's still really the patient that's paying it, right? Because it's effectively coming out of what the company would otherwise pay that employee potentially.
There is that element for sure.
Yeah.
So if a company's paying $1,000 a month for an employee to have health care, well, that's $1,000 that could be going to salary or research and development, all of these other business case uses. But then there's also, so paying the premiums one thing, and then paying what actually happens in the office is another thing. Because there's the monthly premium that happens, but then as you go receive services and care, well, that's when the plan design part kicks in, and that's when we get into some of those terms that you also were interested to talk about. So
Sure.
Most health plans are going to have a deductible, co-pays, co-insurance, and out-of-pocket maximum. As mentioned earlier, those are the 4 most common basic terms that are included. And then plan design or a summary of benefit coverages is going to have all these more detailed line items. So is it an inpatient? Is it outpatient? Is it in network or out of network? Is it labs and imaging? Is it blood tests? So a plan design is going to have all these things, and every single one of those services is going to have some sort of financial need.
Sure.
And it could be subject to deductible. And so deductible, just like on the car insurance side of things, is your first dollars to a member or a customer to pay for a certain service.
Sure.
A copay is something like an office visit or a specialist visit. Those are very typically copay driven. Pharmacy benefit fills at the pharmacy are going to be copay driven typically if you're in a PPO plan.
Sure.
Or versus a high deductible health plan, HSA plan. So
Sure.
again, as you can see, we're probably 6, 7, 8, 9 different terms in,
Sure.
and the nuance is continuing to compound.
Sure.
But a copay is where it's just a flat dollar amount known for a service. So if I am in a copay plan and I go to an office visit, my copay could be $15 to see that doctor, and whatever else the doctor's office charges are, that gets sent to the insurance carrier to pay the difference.
Sure.
Coinsurance.
Under certain circumstances, right?
Yeah. Say more.
There's a whole bunch of caveats there too.
Yeah.
Right? Okay. Go ahead.
Yeah. I mean, to expand on that, you could go to a primary care doctor for a $15 copay, $25 copay, $45 copay, whatever it may be. And then they could order some blood work. And depending on how it's coded, that may be covered in the preventive service part of it, or it could be a separate copay or something subject to the deductible and then coinsurance.
Sure.
And so, yeah. And this is, again, thinking of your audience, things that they're probably not aware of, or nor should they be, right? Like you're there to serve the patient, to help the patient, to guide the patient, navigate the patient. And so you don't have enough time in an office visit to ask these types of questions or to know what CPT codes I have that are covered or not covered, right, and how they are all explained. And so hopefully we'll touch on that a little bit more as we get it further into the conversation, but setting the stage a little bit for how, a physician or a doctor might be experiencing a patient through that.
Sure.
To touch on the last two terms, coinsurance is something that kicks in after your deductible's been met. So if I've paid $1,000 individual deductible, now those other services are subject to coinsurance, and that's where me as the patient has a cost share with the insurer.
Sure.
That could be 90-10, 80-20, meaning the insurance carrier covers 90%, I pay 10%, or the insurance carrier pays 70% and I pay 30%.
Sure.
And then that accumulates to an out-of-pocket maximum. And that's going to be the maximum amount that an individual or a family would pay in a given 12-month period for all of their out-of-pocket expenses.
Sure. In its simplest form.
Yes. Yeah. Yes.
Obviously, there's a whole bunch of ifs and stuff there. So just to back up, just to kind of summarize in a way that I understand, hopefully in a way that our audience will understand, right? So a premium is the amount that I might pay monthly in order to have access to the risk mitigation that the insurance company is offering, right? So that if something disastrous happens, I'm not stuck with this gigantic bill that I'm responsible for 100%, right? So the premium just gives me access to that pool of money, so to speak, right? If I understand you correctly.
Yep.
The copay, well, we'll get to the copay in a second. The deductible is the amount that I have to pay in addition to the premium before the insurance company will pay anything.
Say that one more time.
The deductible is the amount that I have to pay as an individual in addition to paying the premium before the insurance company will pay anything.
Yes.
Right? And then the coinsurance is the additional amount I have to pay that goes hand in hand with some of the money that the insurance company is going to pay once it goes beyond that deductible, up until what you mentioned is the maximum out-of-pocket expense, right? And then the copay is a fee that I would pay at the time of the visit, at the time of service, that may or may not cover everything that's being delivered at that service at that time, and the rest of the bill goes to the insurance company or to the employer or whoever it is that's paying that bill.
Yes.
Did I kind of get that?
Yes.
Okay. So if we were to use some concrete numbers, and you're probably more familiar with the numbers than I am, the averages now, I was looking at something that was published recently, the average deductible, the average premium, and so forth and so on. You probably have those numbers right off the top of your head. So let's go through a concrete example. What does that look like for an average patient?
Yeah. And I think maybe even just using an example of a specific type of service.
Sure.
So let's say you mess up your knee. Sure. You're out running around. You hear a pop. And so that's going to create a waterfall of care in that instance. So it's probably going to start with the doctor's visit.
Sure.
We'll just say your primary care doctor to start, and there's typically going to be a copay for that visit. The doctor will say, hey, yeah, there's something more going on here. Let's go ahead and refer you to a specialist.
Sure.
Given the plan design, you may also have a copay for that. And then the specialist is going to say, hey, let's get some imaging done on that. Now, depending on how the plan design is coded, that could either be a copay for that MRI, or it could be subject to the deductible for that MRI. Let's go with the subject to deductible, and you need an MRI, so you get that scheduled, and you go have that done. The results get sent back to your specialist. The specialist decides we need to have surgery.
Sure.
And so now we've kind of leading up to the surgery, pre-surgery, we've had some co-payments, we've had some imaging, which could be subject to the deductible or co-payment, and now we're going to the hospital for surgery. That surgery most likely is going to be subject to the deductible, which is going to be thousands of dollars for all, the facility fee, the doctor fee, the anesthesiologist, all of those things bundled together, which would actually be billed separately.
Sure.
You're going to hit your deductible, and then that coinsurance is going to kick in. And let's just, for example, say that you hit your out-of-pocket maximum. So in this case of care, you've kind of traversed all the different things. You've had some services subject to deductible that got met.
Sure.
Then you had some services that got cost shared with the coinsurance between the insurer and the member. You've had some co-pays with the office visits, and then you're going to hit that annual out-of-pocket maximum. And then the rest of care is covered for the rest of the year.
Sure. Theoretically.
Sure. Now, the one thing I do want to interject, or two things. One is we've been talking about a copay driven plan.
Sure.
There's also very prevalent and continuing to grow in prevalence what's called a high deductible plan or an HSA plan.
Sure.
Where there is no copays and everything is subject to the deductible, which are typically higher for it to be HSA qualified. HSA stands for Health Savings Account.
Sure.
It's a tax efficient vehicle to save money away to use towards healthcare. But if you're in that situation, let's rewind, have the doctor's visit. I'm paying probably $200 for the doctor's visit, maybe another couple $100 for the specialist. Then for the imaging, I'm paying all of that imaging cost until my deductible's met. And then that's when the coinsurance kicks in up to the out-of-pocket maximum.
Sure. So again, for an average family of four, let's say in the United States, the average premium is...
that just came out. Kaiser Family Foundation just published some recent information. The family premium in 2024 is just over $25,000 and change.
And then the average deductible for that same family?
Probably in the 2,000. Again, I'm trying to parse through, is this a PPO plan, which,
Sure.
Median deductible is around 2,000. A high deductible plan is probably more around 3,000 with out-of-pocket maximums in the $4,000, $5,000, $6,000 range.
Okay.
And that's on an individual.
Sure.
When you're in a family, it's usually 2 times.
Sure. Okay. So let's say we're talking about a family. We got the $25,000 premium. We've got, let's say, a $6,000 deductible for the family. Mm-hmm. And then a max out-of-pocket approaching $8,000 or $10,000.
Yep.
Okay. So if we use a concrete example, let's say somebody needs carpal tunnel surgery, right? I believe the average cost for carpal tunnel surgery, unilateral carpal tunnel surgery here in the Omaha area, somewhere between $15,000 and $20,000. Let's go with 20 just to make the math easy.
Yep.
Right. So the premium's $25,000.
Correct.
Let's say the deductible is $5,000. Mm-hmm. So out of that $20,000, just by virtue of the deductible, the patient has to pay $5,000 right off the bat.
Correct.
Right? Let's say it's an 80-20 split on the coinsurance. So out of the remaining $15,000, 20% of that, $3,000, is the responsibility of the patient. So for the privilege of using insurance, the patient would pay $25,000 for the premium plus an additional $8,000 on a $20,000 operation.
Correct.
Before the insurance company would cover anything.
Yep. They are cost sharing on that
sure,
15,000.
on the $15,000.
Yep.
But effectively, I mean, you could also shuffle that around a little bit so it looks like, okay, well, they're really paying the first $3,000 and then the insurance company's paying the rest, right? So for a $20,000 operation, that family is paid $33,000.
Yep.
And then the insurance company would pick up anything else.
Yeah.
So is that effectively how that would work in this example?
There'd be the remainder
Sure.
of the out-of-pocket maximum that gets cost-shared 80-20.
Sure.
But I think the point to highlight here, outside of the raw numbers, that the math is right. In that situation, they'd be at $33,000 for that year.
Yeah.
And then they'd still have a little bit of out-of-pocket exposure left.
Sure.
But even in this simplified example, it becomes a complex algebraic equation.
Oh, sure. Sure. Yeah.
Yeah.
Yeah. And then obviously, a lot of plans have lots of little details in there which affect that, all kinds of nuances.
Yep.
You may have an anesthesiologist who's out of network and now all of a sudden you're dipping into a different deductible.
Exactly.
And a different set of, different set of circumstances.
Yep.
So this is all for the average person, and I would guess for most physicians, pretty opaque.
Yes.
I mean, I like to think that, I'm an educated man, and I'd like to think that I'm a little bit more aware of this stuff than the average person and than the average physician. But I mean, compared to you as an example, I really don't know very much of anything about any of this stuff, and it can be really scary for the average person sitting out there who's twisted his ankle to ask himself, what do I do? What does all this stuff mean? How does it affect my ability to pay the bills, to keep a roof over my head, clothes on my back, shoes on my feet, and then how does this fit into, now obviously your job isn't just to educate people on the stuff that we just talked about. I mean, that's just scratching the surface of what you do. You're helping to design these plans so that an employer can offer this benefit as a retention tool or as a recruiting tool for employees and their family members, in some cases, right? And so you obviously need to have a really good understanding of all the nuances that most of the rest of us never even heard of. And so what do you see as some of the major pitfalls and obstacles that the average employee in the United States faces these days when it comes to these kinds of concerns?
Yeah. Spot on in the opaque nature of this industry. As briefly mentioned earlier, like there's no other good or service that we're buying without knowing the cost up front. Right. And so I think both with the passing of the Consolidated Appropriations Act of 2021, which kind of has interjected some legislative muscle behind transparency and costs, I think that's, as we look to the future, transparency, the use of technology and innovation are going to be huge frontiers for employers. But also, I should note, yes, we're speaking to a specific audience that's going to be practicing medicine, but they're also going to be purchasers of healthcare as well. Exactly. So this is, kind of a dual purpose conversation to hopefully inform on that front, but then also let them know what the waters are going to be that they're swimming in the future. So that technology and innovation and bringing transparency into the space. Sure. A quick example that comes to mind is, if we wanted to buy, say, a set of pots and pans, we could search on our phone and we'd have hundreds of different results with reviews and knowing the quality and customer comments. There are platforms out there. They're growing in visibility and traction, but that's not, I wouldn't say, mainstream or the majority of health plans in the market now. Sure.
So then in your role as a benefits advisor, obviously you're having to juggle all these different competing concerns. How do we provide the greatest benefit effectively at the lowest cost, right? So that it's appealing to the employer, so that it's appealing to the employee, and so that it's also appealing to the people that are providing the coverage, right? I mean, you're kind of stuck in the middle of this huge, 50,000 member tug of war,
Yeah.
And so, we talk about insurance companies. We talk about what some people have referred to as the BUCAs, the Blue Cross, United Healthcare, what is it?
Cigna and Aetna.
Aetna, right?
Yep.
And then, of course, there's a whole bunch of others, but those are the ones that dominate the market, right?
Sure.
And how they're kind of the engine that moves a lot of this stuff along.
Mm-hmm.
How does somebody like yourself juggle all of that to try to figure out, okay, how am I going to do right by the employer, by the employees, by the doctors, by the people who are providing the care? And then obviously at some point there's a party that says there's only so much I can do.
Mm-hmm. Yeah. There is no silver bullet. Right. We'll start there. And hopefully as the conversations already kind of traverse like the complexity, like part of the reality is in my role is I want to meet a company where they're at.
Sure.
And if that's within the BUCA system and what they're comfortable doing, then I need to serve them where they're at. I would say my mind is always on a bigger vision of attacking some of the things that we've kind of talked about, but this vision or ideal of creating great care and value for patients. It's ultimately creating a patient-centric model.
Sure.
Which I'm not sure we're at in today's age.
Right.
And you just look at some of the carriers and their stock prices, they're doing very well and they're healthy. And not to knock them, I'm for capitalism and making money, and the CEOs of those companies are geared towards shareholder value, and they're doing their job well. But I'm not sure if the patient is the center focal point, top person.
Sure.
Or aim there.
Sure.
And so I think my mind is always trying to create a benefit solution for a company that is going to be patient-centric, and there's a wide array, a range of ways that you can go about that.
Sure.
And direct primary care is a huge movement that started just around 2010, a little bit before that up in the Pacific Northwest, and it's continued to gain adoption. That's a very patient-centric model. It also changes the finances of healthcare. And then just continuing to build on top of that, transparency in costs, direct contracts. How do I, as a company in a local market, say, hey, we need a knee surgery, or we need a carpal tunnel, or we need an image? Like, how can I create a relationship with a local provider to do something maybe without the insurance carrier involved?
Sure. So now obviously I know the answer to this question, but not everybody in our audience does. So what's the advantage of setting up that direct relationship, or what we call a direct contract, between, using the example you mentioned earlier, the orthopedic surgeon and, let's say, ABC Trucking? I just made that name up, obviously, but
it might be out there.
Yeah, there might be ABC Trucking out there. I don't want to run into any copyright issues or anything like that. But this is not trademark infringement. I just use that as an example. But let's say ABC Trucking, they're paying a huge amount of money to Blue Cross, or maybe I shouldn't say Blue Cross, okay, to Metascare, right, or whoever, United Wealthcare, and they're paying all this money to them to administer the plan, right, if they're self-insured. And I know that's a term we haven't yet covered, but let's say they're doing that. How is that different than a direct contract with between the company and the orthopedic surgeon directly?
Yeah. Well, I mean, it's kind of in the name. Direct means me as a purchaser am working directly with a provider, and we are shaking hands on a negotiated price for a service. And so there's 100% line of sight. There's 100% communication. Now, one of the value propositions of a BUCA or a large network is that they do that on your behalf, right? They say, hey, we have this large network of contracts in place with all of the different facilities and all of the different doctors. And so by working with us, then you have access to that. And there in its creation was good value there, like, but there's just continued to be opacity, that's been added. And, one example is the build rate for a knee surgery at a hospital could vary by a multiple of 3 to 4 to 5.
Sure.
Just depending on who that contract is with, what carrier that's with. And so there's just been a lot of shell game movement and negotiations behind closed doors that has really inflated the cost of care. And one of the things that carriers will promote is, well, we have the best discounts. Well, discounts on what?
Right.
You can have the best discounts on the highest denominator and still lose the net cost game there.
Sure. So when we talk about that kind of stuff as an example, we'll use the carpal tunnel example again. So let's say we're talking about $20,000 worth of surgery. Maybe, carrier X was able to get that down to $15,000. But all those numbers we just talked about, whether we're talking about the premium or the deductible or the coinsurance, those still apply in that situation, right? Mm-hmm. And so we're still talking about a $15,000 operation, which under a direct contract system where you set aside the insurance company, you have this direct relationship between the employer and the doctor, it could be under $3,000, for the same outcome, maybe even a better outcome.
Yeah.
And the doctor goes home with more money in his pocket.
Yeah.
And the employer gets to save that much money, which they can then put toward other costs of the company, whether it's increasing employee benefits, increasing their pay.
Mm-hmm.
How have you seen that work out in your world? How does that fit in? How do these direct contracts fit in, and where and how does that impact the employee, the patient?
Yeah. And that's one thing that we haven't been able to talk about is how the patient engages that direct contract and what the benefits are. And so I think the movement or the direction that plans may go is you can create a 3-tier network. So most health insurance plans are 2-tier. There's in-network benefits and out-of-network benefits. Sure. And that designation is based on the carrier that you use and who they have contracted rates with. You could create a 3rd tier, a guided tier, an incentivized tier where when you create a direct contract, it could be $0 to that patient, to that member. Because on the back end, the employer knows they're having a $3,000 negotiated rate with that direct contract versus it being sent to the insurance carrier where it's $12, $15, $20. And so you can create simplification in plan designs and guidance in plan designs. Because again, I'm still learning.
Sure.
I know you mentioned you're learning. Well, I'm still learning too about the cost variance and the network differences. Like it's always changing and always being updated. And so if you can create a plan design that is more digestible and understandable to a member or an employee, well, then that's going to improve their confidence in going to get that care. It's going to reduce financial barrier. If you're able to offer a $0 care or solution and navigate to that, then you've created something where a patient will get care when they need it. It's not going to put financial strain on them. They're not having to decide, am I going to pay that $5,000 out-of-pocket maximum or not? And then the company's going to win because they know that they're getting a great deal, a transparent deal, a known deal. And then, as you mentioned, the provider on the back end is going to make more money off of that arrangement than before. So you've created a kind of a win-win-win in that scenario.
Sure. So then as we think about this 3-tiered system, which, in certain markets, in certain parts of the United States has really started to gain significant traction. Mm-hmm. Here in the Omaha area, it feels to me like it's kind of in its infancy. Is that your impression?
Yes. Yeah. It definitely certain markets that have had trailblazers.
Sure.
Or innovators or early adopters have definitely seen more of this model with that direct primary care and then building out direct contracts around that. But then even nationwide, there are, companies coming up that, like we said, technology and innovation is going to be the next handful plus years that have started to go out and create direct contracts across the geography.
Sure.
Now, to your point, the Omaha market, I would say is we're a little bit insulated from the coast, in adoption, but we're working towards that.
Sure. Now, you'd mentioned earlier about the Consolidated Appropriations Act and the impact that that's having on these kinds of movements. And we've seen some of that in certain markets, like I know in Wisconsin and in Texas and Oklahoma, there's been a lot more movement on that, largely in the form of lawsuits, right? What's your take on that? And how's the Consolidated Appropriations Act incentivizing employers to look for direct contracts?
Yeah. So transparency, data collection is kind of what's part of what's underlying some of that. And then it's also adding fiduciary responsibility to employers that are providing these services. So when an employee is cost sharing, then the company's taking on the responsibility of saying they're going to steward those dollars well. And so the lawsuits that you referenced are related to specific examples where maybe a certain drug was purchased at a price that you could get in a free market, or just paying cash for a significantly reduced price. And so then that just raises the question: what are our operating procedures for acquiring a pharmacy benefit manager? What are our standard operating procedures for knowing that we're getting a valuable contract for the dollars that are being spent on the company's and the members' behalf? And so it's very similar to the 401k fiduciary responsibility that was introduced a handful plus years ago, and that has seen lawsuits and correction. And now it's one of the, it's continuing to be highly scrutinized, but also it's driven some of that waste out of the system.
So, okay, keeping in mind who our audience is, right? We've gone over a lot of technical terminology and information. But ultimately, I think, the average physician out there, the average resident, fellow, even the average medical student hearing all this is wondering, okay, well, what's that got to do with me? How do I play into this? What's my role as a physician in all of this, and why do I even need to know about it? I mean, my answer obviously is that it's because it affects your patients, right? And then, as you mentioned earlier, every single one of us as a physician at some point is going to be a patient also. We're going to be purchasing these benefits one way or another, either through our employer or directly ourselves. So what's the takeaway? What would you want somebody who's new to this, who's providing the care, to know about this in order to help their patients and to help themselves?
It's a good question and very deep, and I am reflective a little bit on the direction to go first. But I think there's obviously a demand for this profession, and it's a very good profession. And I would say, I don't know if the market in terms of offering jobs is fully in a free market scenario. So you might have to go to a hospital system that maybe practices lack of transparency, or it's just hard to know. And that's also not a provider, physician, fellow's role to understand the financing. But where you choose to be employed is going to be, or starting your own independent practice is a choice. And so I would just say, I think the hope is that you can get to working at places that is easy for patients to know the costs. I know it sounds crazy, but what would it look like to go to an office visit and have all of the prices listed up on a board, like McDonald's menu or a Chick-fil-A menu? Like
kind of like my practice.
Exactly. Yeah. So I don't want to put too much pressure or weight in that, but like, know that where you choose to serve and where you're working, like, it's part of that system, part of that ecosystem, and you do get to choose where you serve. And so my hope is that we do move the market and the industry and the economy towards, maybe not an economy, but we move the healthcare space towards a more transparent, towards a more patient-centric type of model, because we're all going to benefit from that. Physicians, practitioners, they're going to feel being able to serve a client or a patient in a way that's maybe different because of some of these changes.
Sure. So just to tie up, since we're almost out of time here, when we think about direct care, because obviously that's the focus of this podcast, right? Direct care, and then obviously how it fits into your world. When we talk about direct primary care, we direct specialty care, direct contracts. I guess my big question for you is this: from your perspective, in talking to the physician in training or the physician to be, is there hope? Is there hope that this system that we have that's so broken and causes so much harm to so many people, that it can either be rehabilitated, or that it can be replaced, or that we can build a parallel ecosystem, as some people have called it, to give patients options? Is there hope for that?
100%. Yeah. I mean, there's going to be people that need help, and the audience is training, giving their lives to help those people. And so there's always going to be a need. And so while market conditions and institutions at play may be slow to adopt, creating, like you said, creating a parallel ecosystem, it's happening. It has been happening for over a decade. I believe Dr. Keith Smith was on the podcast. He's been doing it in his market for multiple decades.
Right.
And so there's blueprints out there. Health Rosetta is another organization that is trying to scale these fixes. Matt Ort up in Wisconsin, he's doing it. He's done it. He's trying to share and spread that message. And so, just keep fighting the good fight.
Sure.
Know where, like I said, where you're choosing to work and the finances of that. And so.
Sure. What do you want our audience to know about Health Rosetta?
They're trailblazers. It's a grassroots movement. And try and get to know wherever you land in your vocation. There's probably a Health Rosetta advisor nearby, and start conversations. Build relationships, work towards, creating something that is going to be patient-centric, that's going to be physician-centric, that's going to lead to thriving and flourishing.
Sure. We're going to have people that are going to want to ask you questions, that are going to want to dive into this deeper. Are you open to, receiving correspondence from them?
Yes, of course.
How do they find you?
Yeah. I'm on LinkedIn. Ty Franklin can search for me. Work for Alera Group. I believe in the podcast notes, I'm going to have my LinkedIn profile should be there. And so would be happy to engage and continue the conversation.
Awesome. Any last thoughts before we finish up? Any final takeaways?
Well, one, just thank you for creating a space for this. And also thank you to the audience that's giving their lives to serving and meeting people in their need. And so, just continue to do that. And we are definitely going to cut some of this. Grace. But so thank you to the audience who's giving their lives to helping patients in their most dire need, right?
Sure.
Like, not everything's an emergency, but you're trying to help somebody that does not have a professional background in understanding health and medicine, and you're trying to help them. And so there's just such beauty in that. And so I have a deep appreciation for the work that you all are inspiring to do. And so, like I said, on the Health Rosetta front, just make connections and build community. And one of the Health Rosetta themes is that the solution to healthcare is local.
Sure.
And that can mean a lot, and I won't go into that, but what I think of is neighbor.
Right.
And so the person that's your neighbor, the person that's at the grocery store, these are our communities, and we need to care for and serve and protect each other.
Awesome. Well, thank you, Ty, for joining us on the podcast today. Thank you for joining us on the Direct Care Movement podcast. We're excited that you joined us, and we're looking forward to having you join us in future episodes as we dive into more questions and more concerns and more solutions in the direct care space, whether it's direct primary care or direct specialty care. If you liked what you heard and you want to know more, please click like and subscribe and leave us a review. And don't be afraid to reach out to us directly so we can get you more information about direct care, whether it's direct primary care or direct specialty care.